Good afternoon, everybody. My name is Kathleen. I am the Assistant Director for Public Services at the Essex Library, and I am honored to welcome Kathleen Titsworth back to our Essex Library stage. So far, we've done in-person programs with Kathleen, but I'm very happy to be able to have her on a Zoom program today. She is the Banking Outreach Coordinator for the Connecticut Department of Banking. She's the Government Relations and Connecticut Department of Banking, Government Relations, and Consumer Affairs. That's longer than my title even. The outreach coordinator for the Connecticut Department of Banking. She manages the agency's educational outreach program by planning financial and investor education programs and organizing agency conferences and events. She handles agency communications, produces annual agency reports and quarterly employee newsletters, responds to media requests, and oversees the agency website. She spends much of her time presenting to groups like ours in the community or representing the department at events to promote the agency's mission of protecting consumers. And let me hand it over to Kathleen. Thank you very much.
Thank you so much, Anne. Yes, I have been with the Department of Banking for many years now, and I love doing the educational outreach programs. It was the biggest change a year ago when this pandemic hit, and I have to say that the libraries were the first people I reached out to in order to switch from in-person to virtual. And it's just been tremendous. It's been great, and the point is to get the education and the information out there. And be it virtual, we're doing it. We're getting the job done. So I'm going to get right into it. I'm going to share my screen and just do a little minor adjustment here. And so today I'm going to be speaking, and I want to thank the Essex Library for having me here today. I'm going to be speaking on credit repair and debt management. This is an issue truly. It's very easy for any of us to get into, whether it's just a minor debt. We've overcharged on the credit cards. Or maybe something in our life has changed and we're not getting the income we once had. And we really have to figure out, how are we going to adjust to this and how are we going to deal with this? But it's possible. It's definitely possible to deal with our debt, to fix our credit. I'm going to talk a little bit about that today, about improving our credit. It may sound kind of easy, but I know for a lot of people it isn't. So we offer some ways that there's assistance out there for that doesn't cost anything, or very minimal, I should say, if anything. So, but in dealing with debt, the key people need to remember is it's not going to go away. I just saw a commercial the other day, and so many, unfortunately, are misleading, and people believe a lot of the things that they see in the ads that they see. And it was a commercial for a company that promised to eliminate your debt no matter what. It's we can ensure you owe $10,000 for XYZ. We can eliminate it. We can help eliminate it. Well, this is one of these things where you may pay quite a bit of money to a company that may somehow be able to assist you in getting that payment made and everything, but there's nothing that you can't do yourself for free. So that's what I'm going to talk about. Debts don't go away, and if you try to walk away from them, there are consequences to that. To the debt collectors, the debt gets sold and it goes on to debt collection. So my point today is I want to show you that there's a light at the end of the tunnel. It is possible, and we're going to talk about that today. So ways to deal with debt. We're going to talk about improving your credit. We're going to talk about ordering free credit reports. It's a really important thing. If any of you have not yet done that, I'm going to show you where you can actually get your free credit reports, how often you can get them, and what you want to do. We want to check them for errors. One of the biggest things that could affect our credit scores negatively is that there's information on our credit report that's actually not accurate. So we want to take care of that. We talk about maybe contacting our creditors, let them know there's been a change in our lives, or that we have an issue, that we have a bump in the road, and, talking to them is huge. And then we're also going to talk about dealing with debt collectors. Now I'm going to get right into talking about credit reports because they're so vital. They're so important. And, some people think, well, why do I have to worry about what's in my credit report? It is what it is. It's, is it really affecting me? Well, it really does. Your credit report affects what type of interest rates you may get for credit. So, for instance, when you apply for credit cards, you may get a nice low rate. Some offer 0%, but if they run your credit, it may not be. It may be upwards of 18 to 20%, and that's high on a credit card. Um, Even for loans, for student loans, you want to co-sign a student loan for a family member, or maybe you're looking at refinancing or getting some kind of line of credit or something like that. These are the interest rates and the rates you pay are directly based on the information that's in your credit reports. So it's so important to make sure that information is accurate. So you can get a free copy of each of your credit reports once a year. So there's 3 reporting bureaus: Equifax, Experian, and TransUnion. And you can go to their individual websites. A lot of people do, but they can charge you potentially for your credit reports there. The only site, and this was set up by the government, where you can get your credit report for free is annualcreditreport.com. It's an excellent website that that gives you a lot of information. I'm going to show on the next slide. I do want to point out here, you can also call and get the copies of your credit report that way. Some people prefer to do it that way, and then they would mail them to you. Otherwise, if you do it through annualcreditreport.com, they come up immediately. Now, checking your own credit reports does not lower your scores. So some people have asked me that, and that's why I've added this in here. You can certainly check your own credit reports. In fact, I state here you could get 1 free copy from each of the reporting bureaus for free once a year. Right now, during the pandemic, you can actually do this once a week. So when you go to their website, you will see. And in fact, I need to change my image here because you can see on here, it says you can get them once weekly through April 2021. They've actually put that out. You can actually do it through 2022. So this is what a screenshot of annualcreditreport.com looks like. And you could see at the top there, there's all kinds of tabs with all kinds of great information, all about what is in your credit report, what you should look for. Even information about identity theft and things like that are on this website. So it's a great site for getting a lot of good information about credit and identity theft. So when you look at your credit report, what are you looking for? Well, there's 4 major sections to your credit report. People like to jump right into the second one, which is your credit history. But I always think the first thing you should do is look on the section that has to do with all your personal information. It's got your name, your social security number, your date of birth, and it also lists your current and any previous addresses that you lived at. And it's really important because you could potentially live in a town or city or have lived somewhere, especially if you lived in a larger city, where there's somebody else that has the same name as you, and you want to make sure your information isn't mixed up that way. There may be variations of your name. For instance, my middle initial is E, so I could have K.E. Titsworth. It could say Kathleen Elizabeth Titsworth, but if it says Kathleen Ann, I know that's not me. If you're a junior or the third, and it comes up, say you were a junior and it comes up with John Smith the third, well, this belongs to your son. Or if it says senior, you have some information on there that belongs to your father. Really important to check the middle names, the versions of your name, and make sure that's all accurate. The credit history is it's probably the most interesting part of your credit report. That's where all your accounts are listed. So if you have credit cards, if you have store cards, so for instance, Macy's, Target, Kohl's, things like that, those will all be listed there as well as any loans, your your mortgage, your car loan, any student loans. They're all listed in the history section. And it also shows your payment. So it lists um, red and green. So it'll show most of it should be in the green. And then if you see something in red, it could be a late payment, could be a missed payment. So it's all right in there. There's also a public record section. So if you've had any bankruptcies or judgments or tax liens or anything like that, you will see a section of your report that's got that in there too. And again, if anything here is not accurate, you want to fix that. You want to immediately reach out to the credit bureau and let them know. You can also look at the fourth section, which shows you who's looked at your credit. So a soft pull, maybe, when you get uh, items in the mail, say from credit cards you don't have, but they're offering you credit. Those may be just a soft pull that they do for people. A hard pull would be if you're actually applying for credit. So when you go and maybe if you're looking for a new car and you test drive a few and you're really serious about it, so you want them to pull your credit so that you get a real exact sense of what you're going to pay, that is going to show up on your credit report. So these are all the main sections. And I say here, I call this "you can repair your credit" because one of the parts I mentioned earlier is if anything in here is not your information, you want to fix that and you want to make sure the information is correct and accurate. If you see errors, you can dispute that with the credit bureau. If you've checked it online, you could do it right in line or in writing. And when you contact them, so when I say the credit bureaus, I'm talking Equifax, Experian, and TransUnion, they have to investigate your dispute and come to a determination as to whether or not you are correct. And generally what they do is they reach out to the company. So for instance, let me give you an example. If you have a credit card on there that you no longer use, let's even say it was never yours, and you can show that that credit card is not yours, they reach out to, let's say, Chase or Discover Card, and it's easy for them to say, nope, that's not this person's card, or yes, it's their card, but they are correct, there's been no charges on there. So it's very easy to do this dispute. You may have to take some time, but they will investigate. Another thing to do is notify that actual company. So let's say you have an issue with some information having to do with your Macy's card, and it says on there there's all these items in red, and they show that you've been late for 6 months straight, and for a fact that you've been paying on time. Let's say you've even set up online auto pay, so you can notify the company and very quickly resolve that and work with the credit reporting bureau to clean that up. Because if you think about that, something like that, all those red late payments will negatively impact your score. And your score is what companies check when they're looking at providing credit to you. So you really want to make sure that information is accurate. Now, people sometimes ask about negative information, and generally this information stays on the report for 7 years. So, you know what I say, you know, it happens to the best of us that we may be in a situation, you may be on here with me and saying, well, oh gosh, I have all this negative information. I have things that have gone into collection. I've declared bankruptcy. That was 4 years ago. You're telling me I still have another 3 years that I need to have this on my report. I really want to improve my score. Well, unfortunately, like I said, things like bankruptcies, these late payments, a foreclosure, collections, they do stay on, but I always say there's a light at the end of the tunnel, and there is. And eventually they will drop off it. Meantime, what you need to do, and I'll talk about in the next few slides, but you just need to, going forward, ensure that you're doing everything you can to improve your credit in every other aspect. So before I do, though, I do want to touch on the score because, again, this is something people ask about. I focus more on the actual content. I really think you need to look at your actual report. Some people say they get their score with certain credit cards or companies that they use to monitor their credit might provide them with their score, and that's fine. But it's always good to check your, as I said, check your report for accuracy, because you may have a good score, even though you have information on there that belongs to somebody else. But you want to get them off that, because who knows if something happens and they stop making payments. And it affects you, and you may not even realize why. So our score, you could see on this image, is made up of different things that amount to 100%. The amounts you owe, your payment history, any new credit, your length of credit, and a credit mix. And I got this from FICO Score, the website. So the 5 factors, which again, I'll go back really quickly, that are shown on this image. 35% is your payment history. So it's, have you made payments? Have your payments been on time? How is your credit in that aspect? That's 35%. Your amounts owed is the amount of credit and the loans that you're actually using. Okay, so that amounts to the 30%, what you are actively using in there. So that is really the bulk. That's over 50% of your FICO score, are those first 2 items. Your length of credit history. How long have you had the credit? So some people ask, I have 8 credit cards. Yeah, I want to get rid of a few of them. I'm just not really sure which ones I should. And sometimes they go right to, should I get rid of the ones with the highest interest rate? And that generally, I would say, is a good idea. But if you have a few credit cards that you've had for years, I would suggest hold on to a few of those, because if you get rid of those and you only have cards that you've only had in the last few years, you're not really showing that long history of payments. Where even though that card may have a high interest rate, maybe just use it when you know you can pay a bill right away, and then you're not paying that interest rate, but you're showing that credit history. So there's another 15% of your score. There's also new credit. So how frequent maybe there's new credit inquiries and you're getting new credit, whether it's cards or whether it's loans. And then they also look at the full mix. So this all comes into your credit score. Now I did have this little break in here. I kind of wanted to just pause here. And if any of you are interested in using the chat feature, I just kind of have 1 or 2 of these fun facts in the mix. So to totally stop talking about credit and debt for just a moment, which strategy for fighting pandemics has been used more often by health officials since the 1920s? Is it A, contact tracing, or B, social distancing? I'll give everyone just a few seconds to maybe put their guess into the chat. Let's see what we got here. I can actually see a few of these. Social distancing. Any others? The correct answer is actually contact tracing. Now, social distancing has been around. In fact, going back to the 1918, I think it was a Spanish flu outbreak back then. But believe it or not, even though this is a new term to us in this past year, contact tracing is something that health officials consistently use for fighting pandemics. Very interesting. Okay. All right. So now I want to get back to talking about credit. And what you're really looking for is, Kathleen, what can I do? I've checked my credit reports. I do have a few things on there I need to work on. It's going to take some time, but what else can I do? Well, sounds very simple, but pay your bills on time. Those late bills that come in when you pay late, they really do negatively impact your credit score. So you want to make sure they're paid on time. One tip I give to people, especially if they're comfortable using online payments, is to do it that way, to set up auto pay. Actually, something, you don't even actually have to be logged in online to do that. You can set up auto pay direct. It's very similar to having your paycheck maybe automatically deposited into a bank account. Well, it's almost kind of the opposite. You're working with your bank to automatically make a payment to certain other institutions, because every credit card, as we know, is backed by a financial institution, whether it's a bank card or a store card. Loans you get, are always through these institutions. So you can set up an auto pay to just pay either the minimum if it's a credit card, or if it's a auto loan or a student loan, you can set it up to pay every month. You'll make sure if your payment is due on the 10th, it could pay on the 10th. It could even pay in advance. But it's a great way to ensure that you never forget. If your bills are coming in the mail, nothing can get lost. Anything you don't have to forget. It's always good to check on it though, to just sort of monitor. But definitely number one is paying your bills on time. Try to keep those balances low on credit cards. This is what happens to people, is when they rely too much on their credit cards, and it becomes too easy to just let those balances grow and grow and grow, and then next thing you know, you're in trouble because you just can't pay them off, and the longer it takes you to pay them off, then you're accruing those extra interest fees. Now, as I mentioned, keep that credit history as long as you can. So if you've got unused credit cards, I recommend not necessarily closing them. Now, I will say if you have a lot of cards and you really, really need to avoid using them because you have really high balances on some of them, you know, that's different. Everything, I'm really generalizing here. I do want you to know because everybody has their own situation that they're in. But in general, keep those credit cards that have a long history. What some people do is take a credit card that they can get a really low interest or a 0%, move that over, but you've got to make sure you could pay that off, because a lot of times after that 6 month or year trial where they're giving you that zero interest, then the interest goes up. So you don't want to be in a situation where you're paying more than maybe you were on the other card. Either way, keep that card with the that you've had for a long time. Now, we talk about shopping for interest rates. If you're looking at, like I give the example about if you're car shopping or if you're mortgage shopping, you're looking at getting a new mortgage or maybe refinancing, it makes sense that you're going to be shopping a little bit and that maybe these places are going to pull your credit. We recommend you do that within a short period of time, and it will not negatively impact your credit report. Now, on the other hand, if, hey, once every other month I like to go test drive cars and they pull my credit every time, well, over the course of time, that's going to affect your credit a little bit. But if the credit bureaus understand if you're shopping for loans and you're doing that in a short time period, they understand that and they work that into when they're determining your score. You really just, it sounds so simple, but you want to just manage your credit responsibly. We all know if we're charging too much or if we've got too many loans and too much on credit and want to try to consolidate that. I say monitor those credit reports. The other thing I didn't even mention, aside from negative and inaccurate information, is the potential that if there's information on there that's not yours, it could be somebody who has gotten your information and maybe committing identity theft. So we want to try to make sure by monitoring our credit reports that that is just our information, number one, and that it's accurate. Okay. And we really want to try avoiding having those payments go to collection. Okay. Credit card tips. Again, try to be responsible with credit cards or with credit. Make sure you can afford it. The bank is not going to give you a mortgage if you can't afford it. They go through their whole process of it. You likely will not get a auto loan for more than what you can afford. So when it comes to making purchases, you need to be your own sort of safeguard there. Make sure you can afford it. Make sure you have a long-term plan or a short-term plan for paying that off. Pay off as much as you can each month when you get that bill in. As I mentioned, pay on time. And you really want to keep within your limit. Some people find they prefer to use their debit card, in which the money comes right out of their bank account, because it prevents them from overcharging. You're also not establishing credit with a debit card. So I say there's pros and cons. You might want to, kind of do a mix with that, but certainly do the best you can to keep within your limit. And I include this in here, avoid cash advances. I almost don't even want to mention them because with a credit card, a cash advances, it's basically very tempting to take that and then, it's almost like you've taken it out of the bank. But with a credit card cash advance, this is money you have to pay back and you'll be paying back with interest. So I've got an example here of what could happen if you have a high credit card balance and kind of take your time paying it off as opposed to trying to pay in full each month. So in this case, I want you to look, I've got it separated into the 3 columns. In the first column, if you make no additional charges, so this is your credit card balance, $2,123.77. Your minimum amount due is $40. So you need to pay 40 on time each month, minimal. So if you only pay the minimum payment, okay, then if we look in the second column, it'll take you 5 years to pay that balance off. And will you be paying $2,123? No, you will end up paying about double, $5,383 by just paying the minimum $40 a month. So you're not only taking 5 years to pay it, but you're paying double what you've charged. And that's just money you are giving to that bank. Okay, so all right, I'm going to pay more than that. I'm not just going to pay the minimum, but okay, I'm going to pay $150 a month. That's pretty good. Well, it'll still take you 3 years to pay that off, and your total ends up still being over $4,200. You're still paying almost double than if you paid in full every month. Well, in full means you're paying that full amount, but unfortunately, you've gotten there by charging so much. So if you can do your best to pay more, pay that down. But this is what happens when this example I'm sharing with you shows you if you let that balance get high and can't afford to pay it all or pay most of it, this is what is going to happen. It's going to take you longer to pay and you're going to pay a lot more. All right. So, what can you do to manage your money? Well, one of the things we say, and it again, it sounds very simple, but you want to pay yourself first. If you have income coming in, so if you're working, have that money go right into a savings account. If you're retired and you have Social Security coming in, let's say maybe you've got some investments coming in or a pension, have that money direct deposited. And then I even suggest a step further, have some of it dedicated to a savings account. That could be your vacation fund. It could be your emergency fund. We all need some money in it for emergencies. It could be where you really are storing that money for the just in case. Or maybe you have other goals. Maybe you have short-term goals that you're saving for. But you want to make sure that you're saving money and you make it a habit. And that's a great way of doing it is by doing it automatically. If you haven't already, you should open an account at a bank or a credit union. Your money can only go so far by kind of, staying in your home, and for that matter too, depending on how much you have, it's not safe to have all your money just at home. It's really, your money is safer in a bank or credit union. It's insured, actually up to $250,000, so you can have different accounts if you have more money than that. But when we're looking, when we're looking into saving money and really budgeting, having money in a bank or credit union is key. I already mentioned putting some of the money from your paycheck into savings. I even tell young people, I say, if you have a part-time job, you've got to put some of that money away, even if it's just $20 a week. Just it's something you'd be so surprised as how much it adds up. Or if you don't have a job, I tell our youngsters when it's a special occasion and you get money as gifts, or if it's a holiday, just unless you've got a goal in mind of things, I need that new pair of sneakers or I'm saving for a new phone, put that money away and you'd be so surprised. You want to develop a budget, and a budget is basically keeping track of your income, what money's coming in, and then your expenses, which is what money is going out. And some people use pen and paper as a great way of doing that. There's nothing wrong with that. Some people don't like to use paper or anything at all, and they like to do everything on here. And there's an app for that. I give one example, which is Mint. but there's other apps people use to handle their budget, keep track of what they're spending. It's a great way to see it. And when you write things down, say you write down your what you're saving, what you're spending, and then if you write down a goal of what you want to save for, people are twice as likely to reach that goal if they write it down. Something to remember. And don't spend more than you have or rely too much on those credit cards. Pretty bottom line, pretty basic, but there's sometimes things we need to remind ourselves. All right. Now, when we're dealing with debt, okay, we're not just talking about saving and budgeting. That's kind of all in a perfect world. And those of us that are able to do that, it's great because when you get yourself in a situation of debt, you have that savings, that emergency fund that you could pull from. But sometimes it's not always that easy. So what happens if you're in a situation where you find yourself in debt? The first thing I always suggest is contact your creditors. Your creditors are any of the people that you owe the debt to. So whether it's the credit card companies, your bank, if you've got loans through the bank, your mortgage company, your student loan lenders, you want to reach out to them and say, okay, this was the payment plan that I've been on. I'm having a little issue. Maybe it's just, I'm not going to be able to make this payment on time, but this is when I can pay it. Or I really need to set up a new payment plan. I need to adjust it because this has been a change in my income. They want to hear from you. They would rather hear from you and try to work something out with you than have you just walk away from it. Or because that's what some people do. It's just easier just to get that bill and just file it away. Oh, I don't see it anymore. But it like I said earlier, it's still there and you still owe it. And that credit report, it's there. It's there. You want to check that credit report regularly, as I said, and make sure those on-time payments are there. And anything that is not a credit that you owe, you want to make sure you handle that. It's such an important part of dealing with debt. Um, and anyone will recommend that you check your credit reports. In fact, I've got the website here again. And so, but there are ways of repaying debt. There's a few different methods that I did want to share with you in terms of paying off debt. And two methods a lot of people, a lot of financial experts talk about are the snowball and the avalanche. So the debt avalanche, that is in which you pay more money towards that one debt that has the highest interest rate. Okay, so let me take a step back. If you find yourself in debt, what you need to do is you almost want to like clear off the table, have all your receipt, have all your statements. If you're doing it all online, let's write it down. Let's get it all in front of us. So you want to see all the debts you owe, and you want to write down what are the interest rates on each of them. So let's say I've got 5 credit cards with different interest rates, and I've got a medical bill, and I've got a student loan. And these are, and they're just, I'm feeling really overwhelmed by this. So I'm going to put it all out, and let's see, I'm going to look into one of these repayment methods. I'm either going to use the avalanche or the snowball. So the avalanche means I'm going to look at the debt, and I've either written it down or I've got them all here in front of me, and I'm going to see the highest interest rate. Because remember, the higher the interest rate, the more money you're paying on that. So the highest interest rate may be your Discover card, or maybe it's your Macy's card. Regardless, that's the one you're going to pay first. And this has nothing to do with the amount, okay? And that's, people just say, then you pay that, then you move on to the next highest interest rate, and you sort of go that way. Okay. Remember though, you're always paying the minimum on all the other bills. You're not stopping payment on the other bills. I just want to make that clear. You're just paying more on that one because you want to pay off the highest interest rate bill first. That's the avalanche method. Now the snowball method's a little bit different. You are paying, you're not going by interest rate. You are paying the smallest debt. So let's say you have those 5 credit cards, one of them you owe 500, and all the rest you owe, like over 1,000 and upwards. Then you have that medical bill where you owe, let's say 4,000. Now that's high. Let's say 1,200. And then let's say your student loan, which you owe much more on the student loan because that's over the course of years you have to pay it. So what the snowball repayment method tells us is I'm going to pay off that $500 credit card bill first, regardless of the interest rate. Then when I pay that off, maybe my next one is that medical bill that's 1,200. And how this repayment method works, again, you're still paying minimum on everything else. You're still paying that student loan monthly bill. You're still paying all of the others, but what the snowball method does is it gives you that satisfaction of paying off a bill. You've paid that $500 one and now you're up to the next one, which is 1,200. Then the next one maybe is 1,500 and then the next one, but you're checking them off your list. Where the debt avalanche, the highest interest rate may not be your smallest bill. So some ways of thinking is, the debt avalanche, is good because you're getting rid of that highest rate, but yet there's some satisfaction in paying off bills quickly, and you could usually do that when you're paying off the lower bills. So each person, whatever works best for them, but these are just two methods that I really wanted to share with you because you also feel like you're taking charge when you do it this way, regardless of what method you use. And, I want to mention also that I'll go back to this for a second, that, there's a saying that your financial health could affect your overall all health. And it's really true. If we ever find ourselves in a situation of owing money and not really sure how we're going to pay it off, you can feel really down on yourself. And it sometimes even affects you physically. You stop eating, you stop sleeping. And when you take charge and when you feel like you have that plan, it's actually helpful for our health as well. I just wanted to make mention of that. Now, how do we handle these debt collectors? If we find ourselves in a situation, let's even say we're on this plan and we're getting ready to pay that medical bill and we find out that the doctor's office sent it off to collection. Maybe you forgot to call them. And again, if you call them and tell them you're working on this, they want to hear from you. So let's just say it's been long enough. You're finally, you're getting on track to take care of your debts, but some of them have already gone into collection. Well, the good thing, that the silver lining in this is that you have rights. They cannot contact you early in the morning before 8 a.m. or late at night past 9 p.m. They can't call you at work. If you're not allowed to take these calls at work, you let them know you're not allowed to get these calls at work, and they need to stop. And if they don't stop, you can contact my agency because we take complaints in regard to debt collectors. We actually license them. So it could affect their license if they are not keeping under the rules of their profession. They're not allowed to harass people or lie about a debt. They can't tell you they're going to send the police after you because you haven't paid it, or that you owe more than you actually do. And if you provide a written request, they have to stop contacting you. So obviously they will contact you initially if they're collecting on a debt that you owe toward, let's just say, a credit card company or a store that you had a credit card to and it had gone into collection. But if you provide a written request to them, they'll stop contacting you. Okay. But it means you are aware that you owe this debt and that you're working on it to pay it back. Again, any issues with debt collectors, you can contact the Department of Banking, and I've got our contact information at the end of this presentation. So I've shared a lot of information with you, and it's very easy for me to say, here's what you need to do, and you'll clean up your debt and you'll repair your credit and everything's all perfect. But I know it's not easy. And some people, it's just too overwhelming. There's too much of it. Or maybe you just don't have the time. You're busy. You've started working extra hours, maybe 2 jobs to start to pay all this off. I need help. Well, the Department of Banking licenses credit counselors, and they're licensed as debt adjusters. That's their formal name under statute. They provide credit counseling and debt management services. Sounds pretty good. And they're nonprofits. They're known as credit counselors. And on our website, if you go to ct.gov/DOB, you would click on verify a license. When I'm done with this presentation, if you like, I'm happy we can actually go to the website and I can show you. But we update our licensee list once a month with all of our current licensees. You always want to make sure you're working with somebody that's properly licensed and registered with the state. I always like to say, if you were going to have some home improvement done in your home and bring in a contractor or just bring in a handyman, you want to make sure they're properly licensed with the state. If somebody's going to handle your money, you want to make sure they're properly licensed. So these credit counseling organizations, they offer counseling services, and they especially work with people faced with significant debt. So you'd be in the right hands. They help you in managing your money and your debts. You've got to lay it all out. You can't hide anything from them because it's not going to help you. You've reached this point where you want this credit counselor to help you. You want to be upfront with how much money you've got. If you've got more income coming in now, and you're thinking, oh, I really don't want to have to pay it all towards that debt. You just got to be upfront with them and just see the change as your bills and debts start getting paid. They really help you develop a budget and hopefully a long-term way of budgeting yourself so you don't get into this situation of debt again. They often offer free educational materials and even workshops. They may be doing them virtually now. But there's workshops, there's assistance. A lot of times they do this over the phone. We license many that are out of state, and that's okay because they can assist you over the phone. And what they do is help you establish a debt management plan. The debt management plan, in some cases, this may be the best method for you. So they may receive deposits of money, and then they use those deposits to pay your debts. So for instance, we mentioned before you had 5 credit card bills and a couple of other debts. So what they would do is kind of consolidate it for you, and you end up paying that out thanks to them, and it gets all of the creditors get paid through that. Includes medical bills, student loans, your credit cards. And the benefits to you is when your creditors know you're working with a licensed debt adjuster, they may lower interest rates. So these credit counselors may work with your creditors to help reduce some of these fees you have and maybe even waive some fees, okay? Because you're using a debt management plan. You've committed to this, so they know that they're going to get paid. And so they're willing to lower your interest on this. And they'll work with you on a payment schedule that works for you and works for your creditors. Okay? So this debt adjuster, like I said, we license them as a debt adjuster. They are also known as a credit counselor, and they may just be that way if you just can't do it yourself. And as I said, they're nonprofits. Some there may be a very minimal fee for, but again, they are a nonprofit, and that's key. Okay. So all in all, how are you improving your credit? You're getting free copies of your credit report. You're making sure the information is accurate. And if anything is not correct, you want to report those errors in writing to their credit reporting bureaus. You want to develop a budget, even if it's just, writing down with pencil and paper, what you're spending compared to what you're getting in. It's very simple, but it's easy to see if you're spending too much. And so important to pay your bills on time. You want to deal with your creditors, maybe reach out to them, let them know that you're having some issues. Let them know that you've had a late fee. Sometimes they waive that, you never know. It's always worth asking. And deal with the debt collectors. Unfortunately, you have to deal with them, but remember that you have rights when it comes to debt collectors. And finally, as I say, if you need further assistance, use a licensed credit counselor. All right. And I always want to add, make sure to protect yourself from identity theft. I alluded to it earlier when I talked about your credit reports, that it's a very quick and easy way to see if somebody else has applied for credit in your name because there's bills there, or there's credit there, and potentially credit cards or other types of loans that are not yours. So how do we do this even initially? Be leery of calls from strangers. These phone calls we get that we know is a robocall, either to these phones or to our home phone, is once we answer that phone and our guard is down, we're not expecting a perpetrator to maybe be trying to get us to fall for a scam. We need to be leery. We don't ever want to give out personal information in response to one of these calls, or email or text. So important. I've actually gotten texts that, oh, I won a prize, or I won an Amazon gift card, or I've gotten emails that indicate that maybe there's something wrong with my Apple password, and I need to click on this link. Then it takes me to a site that looks like Apple. Now all of a sudden they want a credit card, or they want some personal identifying information. A lot of times these phishing emails, we call them, look like they're from a bank. And if it, or PayPal or Venmo. And if you work with these companies, it can really look like it's an actual email coming from them. But I always say overall, whether it's a phone call, an email, a text, if it is unsolicited and you did not make that call, or you did not reach out to that company, you should never provide your personal information like that. If your bank or credit card company really does call you, they will never ask for that information. Yeah, they may ask for your mother's maiden name or a PIN number or something like that to identify you, but never, ever, ever give out personal information in response to these unsolicited calls, emails, or texts. And we certainly never want to wire money to strangers. That's a huge red flag. And unfortunately, the banks and the credit unions, they get the people that have fallen for these scams and they want to wire money. And in many cases, they're able to stop them. But it's one of the key ways that these people want to steal your money. And again, just monitor your bank and credit card statements that come in. You'll be able to identify if there were charges that you didn't make, and also check your credit reports for the same reason. All right, I have one more fun fact before we end here, and I could take any questions. When did the first female banking commissioner serve in Connecticut? So we currently have Commissioner George Perez. We're very lucky. We've had Commissioner Perez since 2015. But we have a whole wall of commissioners, our wall of all the photos, and they've all been, many of them have been male, just like Commissioner Perez. So we want to know, when do you think the first female banking commissioner served? Was it A, 1940, B, 1968, or C, 1984? Let's see, I have a guess for 1968, which would make sense back in the 60s. Anyone else want to take a guess at this? I'm very sorry to say we have never had a female banking commissioner. I almost gave it up when I started talking about that wall of commissioners. We have never had a banking commissioner that is female yet. And I say yet because one of these days, that's what we're looking for. So let's see, I see something in the chat here. Yes, it is outrageous. I have to agree. So if anyone has questions, please let me know. Please put them in the chat. This is our contact information. ct.gov/DOB is our agency's website, and it's really the best way to make a complaint. You can call. We do have people monitoring the phones, but unfortunately with the pandemic, people are still working from home. But we are actively helping consumers with their complaints, with any questions. We have a Facebook page where you can go to and you look up Connecticut Department of Banking, and you can follow us, and we've got some great information for consumers. And anything else, if you have any questions, I'm gonna stop the share now so you can see me again. And I really appreciate you taking the time to come and listen in. I hope I've shared some helpful and useful information with you.
Kathleen, that was fantastic. That was the most information in about 50 minutes. More than 50 minutes. Just fantastic.
It's a lot.
And very
It's a lot.
Information.
Yeah.
It's really
But as
embarrassing.
you know, it's very repetitive. And when it comes down to it, there's certain things that we just need to remember to do. And we really just need to stay on top of our finances.
I agree. I have a few questions. First
Sure.
is, do you have any advice about the best way to shop for a new credit card? Let's just assume that you have very little debt or, for whatever reason, you're looking for a new credit card. Is there sort of a one-stop shopping place to look at all the various interest rates and offers? Or do you have
Oh
to go
gosh.
to one credit card company after the next?
Yeah, gosh. That's a good question. I don't think I've ever gotten that question before. I would suggest maybe first talking to your bank
Okay.
to see what they offer in terms of credit cards. I know a lot of the larger banks in the state, the federal banks, and we're specifically talking a credit card versus a debit card. And the bank may, particularly our community banks, will have their own debit cards to offer. But I would maybe suggest checking with your own bank at first. But I have to say you probably may just, like I say, just shop around in terms of I Google everything. So you can just Google credit cards and interest rates, and you may just have to do a little bit of research and kind of shopping around. And unfortunately, none of them will really be able to tell you what type of interest rate until they run your credit. But again, if you know, if you've checked your credit report and you know everything is accurate and you know you've been paying on time, you can get a pretty good sense that your credit score is good and that you'd likely get a pretty good interest rate on a new credit card. So if you're in that kind of a situation, otherwise, I would just be very careful if you don't have good credit and you're looking for a new credit card to help pay bills, as you'll have seen. I didn't suggest that as a form of paying off your debt would be to get a new credit card. I would only suggest getting a new card if you're in a situation where your credit is good and you know that you can pay it off.
Okay, great. That it was great advice. And then
Yeah.
tangential to that, I see lots of ads on TV back in the day for cash back credit cards, or there are credit cards that will give you points, the airline miles, things like that, where
Yes.
there are benefits to the credit card itself. Any thoughts on the cash back cards? Are they really as wonderful as they make themselves out to be?
Again, I'm going to generalize,
Sure.
but yeah, I would say uh, a lot of them offer. So when they say like the cash back, some of them maybe you get a check once a year. What I like is, and I had a credit card at one point where and maybe it was more the points, where it would earn the points, and then once a year I would look and say, oh, I'm going to put that towards my balance, and it might pay off one of my one of my bills. I know a lot of the store cards. I suggest, if it's a store you shop at a lot, and it does help you earn points towards the purchases like that, it could be very nice and very helpful. Where I'm leery of are the stores. I highly tell people not to do this. Is when you're in a store, the cashiers are so good, they're salespeople, where they say, oh, if you apply for our credit card, you can get $50 off this purchase right away. And it's enticing, but
Mm.
they're running your credit and now you have another credit card. So I know that wasn't your question, but it sort of segued into that.
Yeah.
Yeah, I think with the airline ones, if let's say you frequently travel to a certain destination and there's a certain airline you always use, and they offer a credit card that offers points, and you find yourself, that may be great for you. I wouldn't recommend maybe having them for every airline out there, and then because you're really not going to get anything out of it if you're sort of just on occasion. If you're a regular traveler to a regular, on a regular airline, those can be great. I know people that have gotten them in order to earn points towards like cars, and I don't know how much you have to spend to be able to do that, but my family, to share a personal one, we have a Disney visa. So we go to Disney once every few years, and we just charge all of our big charges on that we know we can pay off, and then it sort of accumulates some points for that. So I think they could be useful for people. I just, in general, I'm always leery of people having too many.
Right, right.
So
And
they
then
want to be careful of that.
one final question from me out of curiosity. If the debt adjusters, by and large, are nonprofits, how do they make their money?
Right. Well, I did say there could be a little
Sure, sure.
a nominal fee. Yeah. And these they work with a lot of people, and it's uh, yeah, that's got to be the way that they do it, are in those types of some of the fees for the services they do. But it's always worth it, I say, for people who are really in major debt, and just the anecdotes I've heard from different people who've used them is that it's worth it, and it's what they needed to do to just get themselves in a better situation.
Okay, great. Thank you. So we're a small group
Yeah.
today. So if anybody else would like to ask a question, you go ahead, unmute yourself and shoot away to Kathleen.
Okay.
All right. All right. Well, that's fabulous. Kathleen, I can't.
I think I covered a lot. I'm glad to say I covered a lot.
Your
So,
information is so good. That's just fantastic. And it's something that we can also help push out to people through our social medias, how to get in touch with you and some of the facts about the credit adjusters, or I'm sorry, credit counselors.
sure.
So I really am appreciative and grateful for your time today. And thank you so much for helping us out. And we'll get some of this information out to the community. So with that, thank you
Sounds
all.
good.
Well,
Thank you so much for having me. I appreciate it, Anne.
it's always a pleasure.